Uh,
Thank you, Mike.
yeah,
Let
really
me
looking forward to this, Stu.
let me just get my screen thing set up properly. I'll go screen, go live.
All right.
Okay, I'm sharing my screen now, so you should be able to see a bit of a Google slide there. Yep, perfect. So I thought I would try this to see if you guys were interested enough for me to do another one on another indicator or not. So what I thought I would do is actually deep dive into an indicator to show you how it's constructed, how that actually looks, and therefore when you understand how it's built, then what can you tell from it, and how can you then use that in your trading. So the stochastic indicator has been around for a very long time. So 1954 or 55, something like that. So it's been around 60 plus years. And it was developed in the pre-computer age. So the formula for it is actually relatively straightforward. It sounds as though it's a very complicated thing, but it's actually really quite simple, and most people generally don't understand it. So what actually is it? It's an oscillator along the lines of RSI and those sort of things. In fact, RSI is kind of its cousin, if you like, and it's made up of two things. This is where it starts to sound complicated, but genuinely it's not, and I'll do a kind of drawn example for you. But there's two lines. One is %K, which is the actual stochastic itself, and that's essentially, it takes the close of today minus the low of the look back period. So how far are we from the low of the look back period? And then divides that by the range of the high minus the low of the look back period. So what it's actually telling you is whereabouts within that range is the current closing price. So what does that actually tell us? Well, that gives us an idea of the momentum, the difference between one day and the next. So you can see where momentum actually is. By default, it uses a 1433 parameters, but by default, it normally looks back over the 14 days. Now, I don't use it like that, and I'll go into that in a little bit here. But essentially, what it is, it's an indicator that's showing you where within that range the closing price is. And the reason we multiply it by 100 is to give us a percentage. Like all oscillators, it goes between 0% and 100%. And therefore, it'll tend to bounce up and down. So it actually doesn't really follow price or anything like that. It actually just follows itself. But what it's showing you is where in a range. So it's following a range, if you like. Most charting packages, in fact, I think all charting packages have stochastic, but there are various differences out there by what people call them. So if you look at TradingView, for instance, there's fast stochastic, slow stochastic, full stochastic, all these kind of things. But the %K line is what's called the fast stochastic. You can then take a moving average of that as a signal line, which kind of smooths it out a little bit. And that's known as %D, and you'll see that on pretty much all stochastic parameter setups. Typically, it's like that's a 3 period. So by default, I would say a 14 and 3. They often use internal smoothing as well, which is what is called a slow stochastic, and it kind of smooths things out. And again, I'll go through these one by one. But the smoother the line, I generally find the easier it is to follow. So I tend to use a slow stochastic indicator, which is what they call a fast stochastic with smoothing. So that's why it gets so confusing, I think, for people. But essentially, all the indicators, no matter which one you choose, is showing you where on a range price currently is. And where it has been over that look back period that you actually have. So what does it actually tell us? So really it's about that relationship between where the closing price is and what the previous look back range has been. As I say, it doesn't really follow price or volume or anything that, but it's really a momentum indicator. It shows you what the current momentum actually is. And as breakout traders or momentum traders, then it's an important indicator to use. In fact, it's probably a better indicator than many of the other ones that people sometimes use because it's a pure momentum indicator. People sometimes use it as a little bit of a predictor. It's not a great predictor, but or I should say, as a rule, the momentum or the speed of change in a stock's price tends to predate a move either to the upside or the downside. And when you use the actual stochastic line, if you like, and a smooth line, then when you see crosses on those lines, then it tends to identify where the reversal points actually are. The other way people sometimes use a stochastic, which is very different and counterintuitive to how most people would use an oscillator, is they can actually tell you what that consistency actually is in terms of those closing prices. So it can tell you when something has just gone into an uptrend and how long it's actually staying in a strong uptrend. So those are different ways to use it, and if you've been used to using RSI or something, some of this will seem a little bit off to you, but it's just the way that this indicator is actually working. So what I shall try and do is bring up my whiteboard and create a stochastic for you so you can see how it actually looks. Right, I've got my tablet out. I've not used this for ages. Right. So if we just stick a 10 period, because it's easier for me to draw 10 bars. So if our first bar was here, second, third, fourth, fifth, and then we get a little bit of an up, it starts going back up. And I'll draw a little down here, and maybe another one up here. So that should be 10 bars, hopefully. 1, 2, 3, 5, 6. Yep, it is. So if we were doing a 10 period stochastic of this chart, this here is our high, and this here is our low. And what that then, if you like, equates to on a stochastic, that is the 100 mark, and that is the 0 mark. Now, where this price closes is what gets plotted on your stochastic indicator. So I'll just kind of draw these out for you. So this would actually be, maybe call this sort of 88 or something. That might be 72. This might be 39, 38. And that one might be 9. And then we're back up 37, 50, 51, 40. 72. And that, so when you actually see a stochastic, these are the lines that would then be plotted on the chart. And you can see how that's kind of following the momentum of the close. And what actually then happens is the stochastic will kind of just joins these things up. Like so. And that's what you see on your chart. And then when we get the next day coming in, when we draw another line here, and put a chart in there, then it'll go up there and so on. So it just kind of follows along from that. But what you can see here is, the important thing is, when prices all start to close up above here, and you know, with this, then you've got a new higher level, and so this becomes 98, and then it goes up again. You got a new higher level, and that maybe 97. You can see that the indicator starts to bounce around up here. and that can tell you when that trend is strong and when to actually stay in it. Vice versa, if it keeps making new lows, the indicator will always be down in this sort of low range here. So we can see that we've got a defined downtrend. So let's see this on an actual chart. I'll switch back to my mouse. I'll go through a few subtleties of it before I go back to the presentation. So here we have a stochastic, and this I've set this one to be. This is the settings I use all the time. I use a 10 period. I can show you it there. The look back period is 10. I use 4 periods of smoothing, and it's a 4 period moving average, that %D. Over the years, there's various different settings that you can use. I use a 10 period look back because the 10 period moving average is the one that is most important to me. If we're looking at this, what is this RSI we're looking at? You can see how it follows. When it's down here, this is where prices are closing near the lows. And when it's up here, this is where prices are closing near the highs. So you can see where that happens. And then we've got an awful lot of closes down near the lows. So this is why this indicator is staying down in this level here. And vice versa, as it's going up, you'll find it bounces around an awful lot in this top period above 80%. So there are a number of things we can do with this, but going back to why I use a 10 period, what I've found over the time is whatever the predominant moving average is that you use is the best number to set your look back period to. So if you predominantly traded around a 21 period moving average, then if you went in and set this to 21, you can then see how it changes this stochastic. But if you were looking at a 21 period moving average, you could see that at this point here is almost the start of your trend. This is your strong uptrending piece, and then as you come down here, then it's starting to break down a little bit. And again, you'll see that happen over and over again, but depends on which moving average you like to trade around for your entry and exit signals. And I would suggest that if you're going to use this at all, that's probably the best way to set your numbers. Again, if you wanted to see a straightforward, just an actual stochastic on that 13. So this red line's the actual stochastic. That's pointing to where in that range that these are closing, and that's a 13 one. The default it'll come with is 1333. It's probably the least useful settings. I don't know why they were there, but again, you can see on it how it's showing the momentum of it. I'll go back to 1044. Now this works across all time frames, so it doesn't have to be daily. In fact, I prefer to use it on an intraday chart, but works fine on a daily chart if you wanted to look at it on a weekly chart. I don't know what's happened there. The Freedom Views died on me. We'll go back to daily, flip it down, see if we can get an hourly. Yeah, there we are. Hourly charts, 30-minute charts, or whatever. And again, because I've selected a 10 period look back, it tends to show me what price is doing around that 10 period moving average. Now, what are the traditional signals that people use within this? If I flip back to daily, what people tend to look for is these crossovers. Now, I will come back to the drawbacks of this, but if I look at here, well, a we've got kind of crossover point down here. I just wish that would go away. You can see where that signal line, which is the, remember, is the smoothed version, is a 4-day moving average of the stochastic, crosses above the actual stochastic here. That tends to be used as a by a lot of traders. In and of itself, it's prone to false signals. So, but what it can do is give you an early heads up that momentum here is changing. So you can use that to your advantage and start looking for setups in stocks, you know, in the next few days where that momentum's starting to change. Because I certainly wouldn't advise you to trade off of this indicator at all. But what also you can use is the opposite end. If you're looking at entering a trade and you start to see across here, you might be looking to get in, but momentum is actually likely to turn against you at that point. So sometimes it's better off being aware. So, you know, use a tighter stop or whatever. There's no guarantee that it's going to go down, but as a rule, it generally follows that as that momentum fades, then price starts to follow it down. So you can use it as a little bit of an early warning signal for those sort of things. The one that a lot of people also use is when you get a crossover down in this sort of range under 20 or preferably under 10, and then the stochastic line crosses above into this kind of green zone that I've got marked here. That tends to be where the turning point in a trend actually comes. And if you do use a sort of longer period one, you'll see that more often. I think it's worthwhile kind of going through there. The other key area that I use it for a lot is when I'm setting stops, and I tend to use an intraday chart for that, but there's a good example here on, you know, if we were buying off of this pullback buy on this moving average bounce, this candle here, the low of this candle is relating to the low down here. So that's a relatively safe spot for a stop. But also, as you see, this particular low point here is on this candle. So the stop sitting there at 12.12 is actually probably a safe stop, if you understand what I'm saying. So because that's a turning point in that stochastic, that's a safe stop. The low down here is also a good area for a safe stop, but it helps you determine where those stops actually can be. In my day-to-day trading, I tend to use it here. This is a 1044 stochastic on a 30-minute chart, and I use that for placing stops and looking at when is an entry a viable entry. So I was getting into this RSI here. This had been across, so I know I'm kind of good to go. I've got momentum on my side, at least for the next few candles. Same with this one, got momentum on my side, and this is a great stop placement area down here. So that's where your stop is, and that's that little S on the chart. So that's stochastics. It gives you that view of the momentum of a stock. Remember, it's not really to do with price, it's about where the close of the stock is within a range. And what that range is very much going to depend on the time frame that you're actually trading. So I'll flip back to my thing. So yeah, limitations of it. Yeah, it can produce false signals, particularly when volatility is high. You'll find it jumps about an awful lot. The way to overcome most of those false signals is to only use it at the extremes. Similar to how you'd say RSI is overbought when it's above 80 or oversold when it's below 20. You look at crossovers in those areas, they tend to be more reliable, more robust. It is counterintuitive in a strongly trending stock, and let me show you that. If we go back to trading view, so let me go here. Let's bring up a strongly trending stock. Well, let's look at SI. So if we go back to SI at the start of its run, a lot of people look at something like a stochastic and go, well, this is overbought, because they're so used to RSI. Whereas what this is actually telling us at this point is this is a really strong trend and we're looking to get in. And it doesn't really let up until it starts closing down under this kind of 50 period piece, round about here on that pullback. And then it goes straight back up to a really strong trend again. So, you know, when people have stochastics on the chart, they see things at the top of the chart and they tend to equate them with that RSI. Oh, overbought. It's not. This is just showing you how strong that momentum and trend is. So when things are up here in this yellow zone, they are in a very, very strong momentum situation, and price is closing up near the top of its range all the time. So, and that's what catches people out and can be counterintuitive. I think as I went over, it's highly dependent on the chosen look back period. So you need to use, if you're going to use it at all, use it in conjunction with how you trade. So if you like to buy stocks off, or you know, if you're exiting and entering when things are moving above a 10 period or below a 10 period, then use a 10. If it's a 21 period, use that. If you're trading off the 200 period moving average, then use that as your look back period. As I say, it's a close cousin of the RSI, which is a velocity measure and is one we could cover in a future deep dive session. But they often get confused by traders because they are both oscillators. But you have to know how it's made. And it's often thought to be more useful in ranging markets. And in a ranging market, yes, it's one of those indicators that will tend to show you the top of a range with a crossover and the bottom of a range with another crossover. And if you have a nicely ranging stock, it's, you know, got a range of 15-20% and it's just going between those two extremes, then you can start to use things like a stochastic as something that's giving you actually buy and sell signals if you want. And there are many systemic traders out there that use it for that sort of thing. So what's the best way to use it in your trading? I've covered a few. It can give you a confirmation of high probability setup. So if you're looking at a breakout trade, on a quick glance down at your stochastic, and if it is crossed over and it's heading up the way, high probability. If it's crossed over and it's going down the way, less of a probability. You can use it for stop placement. I mean, I use it for that, but on a smaller time frame, obviously. Trade management. I do often keep an eye on it when I'm managing a trade, and if I see that momentum starting to fade, then that's where I'm looking to maybe tighten up stops. Look, is it time now to scale out a little bit and, you know, maybe take half off and leave a bit on or whatever. So just one of those little trade management signals that you see. You need to have a little bit of a look at this one. I've got stop placement down again. As I've said, that trading signal on crossovers, you can look at where stochastic crosses above the smooth one, or vice versa, or below it. Most often used in conjunction when you see a cross below, gets you ready. That's the kind of get set, get ready, and then the go signal is where it crosses the 20 or the 80 line. And it can just be useful as a general price momentum.
I'm going to play now for a minute to listen to some.
So that's where we are. I don't know if there's any questions. I think I've used
What?
my half hour. So,
Why?
does anybody want to ask anything?
What?
Oh.
I think somebody's microphone is open. There's some background noise. I have a couple of questions. I think, well, first, dude, this is freaking outstanding. Like my level of awareness around stochastics is dramatically improved, and I think that this is something that I'm going to a tool that I'm going to add to the toolbox for sure, and definitely play around with it. So, thank you for this.
You're very welcome.
Couple of first, I was. Could you show us like maybe a couple of other trades that you're in? So you're in RSI and you're in Monday too, right?
Yeah, I am. Yeah.
Can you show us like walk us through Monday and the stochastics on that?
Sure. So let me flip back to here. Yeah, essentially, I bought it in here as it came out above there.
I think we
When
have the same entry.
Can you see this? Yeah, I'll make this a bit bigger. This is I say I use it on an intraday time frame, the stochastic. Occasionally I do look at it on the daily, but I was looking to buy here. Momentum is high on this trade, and kind of increasing. So that's why I had a bit of confidence to buy it in here. If I was looking at this, you know, as a potential reversal play, then I probably wouldn't take it, because if you can see down here, that momentum's falling. So I tend to like to wait for momentum to start increasing. Give me a higher chance of this one actually getting out and going somewhere. So, you know, it kind of went up, but I mean, this was, I don't just base this on stochastics, you know, as you know, Mike, it's just another tool that you have. You know, I was looking at volume and overall setup, and the fact it was following a 50 period moving average. But that's where we are, and I've kind of moved my stop up to here at the moment, just sitting under here. There was a safe point here. See where I put my initial stop. So this was the bottom of the momentum move there. So that's why my initial stop was sat there. And I've kind of just moved it up a little bit. There is, you could maybe argue that you would put a stop in there, but I personally wouldn't. I like to see a kind of a clearer, that kind of nice U-shaped dip. So, and the next time, you know, when this moves along and I get another one of these little dips, then I'll move my stop up under the dip. Kind of a little part of stock management. But that's kind of how I use it, for just cherry picking the actual entry points and things.
That was a really good explanation. I appreciate it, Stu.
You're very welcome, Tish. You know, there's so many of these indicators that people just put on charts and don't know what they're telling them. So thought I'd see if you guys enjoyed maybe a deeper dive into how that indicator was built and what it's actually showing you.
Stu, would you mind going through one more time, like the difference between the two lines?
Yeah. Okay. Let's jump back in here. Let's make it really big. So I'll make this very, very big. So what we have, if you go back to the inputs, you have the so the way I've got it set up here is the green line is the actual stochastic number, and the red line, which is my %D, is the smooth version of that. So they all call it %K. They should just call this stochastic and smooth stochastic or something like that, but they don't. So this green line is where price actually is on a range of 0 to 100 over the last 10 days. So where's the closing price? So it's right down the bottom of the range here, as you can see, closing below 20%. So it's within 20% of the bottom of the range at this point. The red line is the 4-day smooth version of that. So it's a little bit laggy. It's like a moving average, if you like. So it's just a little bit slower to react. And often that's why it's called a slow stochastic. So it's just following a bit slower. But when you'll find that your actual stochastic, so on this next day on the 21st, our close was up near the high, much higher up than previously. So it was within 26% of the bottom of the bar. The next day it was within 33%, and you can see how as you go up during the different days, you can see how further and further up that range the price is going. So this is showing you the momentum, and this is the kind of, I feel like the green line is the momentum, and the red line is the longer term momentum, which is where price tends to be. And whenever I've explained this to anybody, is the stochastic shows you the direction of price, and then price kind of lags a few days behind, which is why some people think it's got predictive abilities. I can tell you right here and now, it doesn't. It's just the law of big numbers. There's nothing predictive about a cross on a stochastic chart or any oscillator chart. The only thing is because generally price will follow momentum. But there'll be periods when you see cross after cross after cross. It's like moving average crosses, if you like, Mike. So there's nothing particularly predictive about this, but what it's showing you is momentum to the upside is now going up, and the longer this can stay above that 80 kind of zone, if you like, the stronger the trend. So you see something up here on an RSI, you tend to think it's going to drop down, but see them up here on a stochastic, you want to be in this stock because this is trending really strongly. And vice versa, this is having a bit of a serious pullback here. Getting a bit extreme at that point. So, but the way that some people trade it is when they see this cross, they kind of get ready. Next day, kind of on your marks, and then when it actually crosses above there, then that's where they buy. And overall, it's not a bad system. I think it's a winning system, generally speaking. But the cross has to be under the 20, and then you don't buy it until it is crossing over that 20% mark. Does that answer the question, Mike, or did I go off track?
No, that answers quite a bit. I do have another question though. So the green is looking at the past 10 days and it's plotting that. The red is taking a 4-period moving average of that.
Of that, yes.
So you have the setting to 10, 4, 4. So 10 is the first look back. The 4 is the moving average. Well, what's the secondary 4?
It's to smooth it out. It's a smoothing. The secondary 4 is a smoothing algorithm that's used just to smooth out the line.
Okay.
So it uses 4 points of smoothing on the line rather than just joining the line from day to day to day to day. It uses those 4 points and tries to draw a smoother line in between them.
I got it.
You got it.
So it's an average of the average, right, Stu?
Pretty much. Yeah. But what you need to be looking at is that the green line, any point on that green line is showing you where that day's close was in relation to a 10-day period range. So on this one, even though it's coming down, it's quite high up. So it's closed within 70% of that last 10 days high. What this one here is showing you is the average of this close, if you know what I mean, Mike. It's showing you a 4 MA basically of what's on the green line, if you've got it set to 4.
Okay, so I understand why you selected 10 as the
Yes.
because that's the moving average that you use. So why 4? So why 4 and 4?
Because I think it draws a cleaner, more reliable line. There's it's just a personal thing. If I change this to how it normally comes, 3-3, the line gets a bit more jaggy. Whereas I like I like to. I don't think tend to not think that the market necessarily turns on a dime. You do get up days and down days and all that where you'd think it would, but I like to see just a little bit smoother. It's just personal preference, but you could use 5, and you could go as many as you like, and it'll smooth it out even more. But 4 for me is a bit of a sweet spot. That's all. Personal preference. By default, it comes with 3 and 3, so it's up to you.
If you were looking at a 21 period moving average, would you still use 4 and 4, or would you use something else?
I'd just use 4 and 4, but the 21 you can see is quite a swing trade friendly stochastic, because it's showing you, if I pull that down, it pretty much shows you where that trend starts down here and kind of where it ends about here, and then it's down. Remember that this line and all that kind of stuff has got nothing to do with how far price falls. So that's what I keep saying. This is not really to do with price. This is momentum. And then you can see, if you bought it back in it there, then it's the momentum is to the upside. So.
I have a question too, Stu, on that 20 to 80. Is that where you're like your buy and sell, kind of what you were just talking about? Because I noticed you said down at the bottom you would buy,
Yes.
where the 20 mark is. So you really don't want to be buying below the 20 just because it crossed over down there.
Yeah. So there's this way where you can get a lot of chop with these types of indicators, and the reason, if you were looking to go long or short based on this only, it's not a great idea, to be fair. But when that crosses below the 20, then it tends to be it's near the lows. It really is. So there's on this point, you're within 10% of the lows of 21-day lows. So, and the momentum is creeping up, but it's kind of waiting a few days to confirm that. So we're now 20% off of those lows at this point. So that's where you would actually buy it. You get your cross and you're ready to buy, but you buy it as it crosses over that 20, and that kind of gets you into that trade. But you wouldn't just blindly buy it. I mean, that when that crossed over, I don't know. It's probably at this point around about here. I mean, it's not a bad buy point, but it doesn't mean it's going to work necessarily, because this is just momentum. This is just purely trading momentum. But it's useful to know if you've got momentum on your side or not necessarily. It's the same if you were considering buying this breakout up here. Well, at this point, it's pretty strongly trending stock. So, you'd look at that and go, yeah, momentum is on my side, but that failed. Very next day, you got a warning signal saying, no, actually, in the short term, momentum's not what it was. So. But it's sometimes it's worthwhile just putting these things on your chart and getting used to how they react. But don't trade off them. Don't make decisions off them until you're very used to looking at them. But yeah, it's momentum and the strength of a trend is kind of what you're seeing on it.
Stu, I'm curious how you would classify yourself. Like, well, what kind of trader? You had mentioned that the 21 is a swing trading friendly.
Yeah.
But you use a 10, so how would you classify yourself?
Well, I'm a short-term swing trader, so
Got it.
yeah. So I'm not really holding for 8, 12 weeks and that kind of thing, Mike. So I tend to be, 2 to 3 weeks is generally my holding period.
Yeah, fair enough.
Okay, well, anyway, I'm glad or some of you found it useful anyway.
I thought it was
Any other
outstanding.
questions, hit me up in the chat and I'll answer.
Appreciate it, Stu. Thanks.
Yeah.
Yeah, let's see. Any other questions? Well, we're still here.
Just remember that diagram. Yeah. It's terrible, isn't it, my drawing?
You know what? It's better than my drawing. Like for people that saw my chicken scratch.
Yeah.
These little tablets are fantastic, and I only discovered them maybe a month ago.
Yeah, I've had mine for many years. It's too big, mine actually. Mine's an A4 size one, and it's actually too big. I really need to get a smaller one.
Right.
But yeah, they're very good for just jotting stuff down, aren't they?